Hi, it's Todd Lay, and today I want to talk to you about being able to manage cash for your business. And we're coming up here towards the tail end of quarter two. Got about a month left. Here we are in the month of June. And one of the things that I find happens a lot as we inherit new business clients from either bookkeepers or other CPAs and things like that along the way is I find out that towards the end of the year that maybe a business owner has made a tremendous windfall in profit throughout the year, and one of the things that they have not necessarily planned accordingly for is for the taxes associated with that. Maybe they're not paying themselves a reasonable salary. Maybe they're only paying themselves $20,000 or $30,000 a year, if even that at all. Or they're just taking all the money out in the way of distributions. And so surprisingly, what happens at the end of the year, there's no cash left over to pay for the taxes on all the profits. And so one of the things that we help our clients do is we usually set them up with about 4 different bank accounts. We look at an operating account, a tax savings account, a savings account to help build capital. Usually about 2 months worth of operating expenses is what we shoot for. Sometimes it might take anywhere from 6 months to 2 years to build that account up to cover those 2 months worth of operating expenses you've got stored in the event for lean times. And a payroll account. So that's right, there's 4. Operating, payroll, tax savings, and a core capital account. And one of the things we look at is that at the end of each month, when we're going over the profit and loss for a business owner, we just simply look at a simple calculation of roughly 10% for the state. So if you're here in California, roughly 10% for state payroll or state taxes. And then we look at about 35% federally. Now, I know that's going to change here with the new administration in place that's with tax reform and so forth. But roughly about 45% of whatever the net profit is we'll go ahead and look at moving that amount of cash directly from the operating account over to a tax savings account. And so the business is that way is left to operate on what's there in the operating account, and it's not there trying to operate on money that's earmarked for tax. So hopefully that's giving you some insights along the way. If you want to share your comments down below, I'd encourage it. I'd like to interact with you there. And other than that, go out and have a great day, and we'll talk to you guys soon.